Right now, thousands of Americans are opening their banking app and seeing a big red word, frozen. Not because they did anything illegal, not because they're rich, because of one small mistake with their taxes that nobody warned them about. In the next 30 minutes, I'm going to show you the 5 mistakes that are freezing accounts in 2026 and exactly how to make sure yours is never one of them. Mistake number 5 is the one almost everyone is making right now without even knowing it. Hey, welcome back. If this is your first time here, I spend my time digging through IRS updates, tax law changes, and real banking policies, so you don't have to. No fear-mongering, no clickbait rumors, just what's actually true, explained in plain English. And I need to say this up front because it matters. There's a lot of scary stuff online right now about the IRS watching every $600 you send on Venmo. Most of that is false. I'll show you exactly what's true and what's not in a minute. But here's the thing. While that rumor was spreading, something else was actually happening. Real rule changes, real reporting requirements, and real cases of people getting their bank accounts frozen or held, not because of some secret IRS spy program, but because of simple, avoidable mistakes. So here's what we're doing today. I'm going to walk you through 5 real mistakes, the kind that are actually causing account freezes, holds, and IRS letters in 2026. By the end, you'll know exactly what to check in your own finances this week. Let's clear the fog first, because you can't avoid mistakes if you don't understand the real rules. For the last few years, there was a huge fight over a rule that would have made apps like Venmo, PayPal, and Cash App report anyone who received more than $600 a year. That rule came from a 2021 law, got delayed again and again, and caused a wave of panic every single year around tax season. Here's the update. That $600 rule for payment apps is gone, rolled back. As of 2026, the threshold went back to the old standard, $20,000 and more than 200 transactions in a year. So if you're a normal person splitting rent with a roommate, selling an old couch, or getting paid back for dinner, none of that is triggering a form. That panic you saw online, mostly noise. But, and this is important, 2 other things did change, and this is where people are getting caught off guard. First, for people who run a small business or do freelance work, the reporting threshold for certain payments actually went up, not down. Instead of $600, it's now $2,000. On paper, that sounds like good news, and honestly, for a lot of small business owners, it is less paperwork. But here's the catch nobody explains. The income is still taxable, even if nobody sends you a form for it. A lot of people are hearing the threshold went up and mentally translating that into, I don't have to report this anymore. That is not what it means. It just means fewer forms get generated. Your legal responsibility to report the income hasn't moved an inch. Second, and this is the part connected to actual bank account freezes, there are new backup withholding rules tied to these thresholds. In plain English, backup withholding is when a payment company is required to hold back a chunk of your money and send it straight to the IRS, usually because your tax information doesn't match up, or because you didn't provide the right paperwork. This isn't new in concept, but the thresholds and triggers shifted in 2026. And a lot of people who used to fly under the radar are now being asked to verify their information, sometimes for the first time. On top of all this, banks themselves have been tightening their own internal rules, separate from the IRS, around suspicious activity, elder fraud protection, and large or unusual transfers. Some of these bank-side rules now allow accounts to be held for extended periods, sometimes close to 2 weeks, if certain red flags come up. That's not an IRS rule. That's your bank protecting itself and, in some cases, protecting you. But it feels the same from your side of the screen. Your money is stuck, and you don't know why. So when I say IRS New Rules 2026, I'm talking about this combination: real reporting changes, real backup withholding triggers, and banks reacting to both the IRS and their own fraud systems. That's the real landscape. Now let's get into the 5 mistakes actually causing problems. Mistake number 1, mixing business and personal money in one account. This is the single most common mistake I keep seeing, and it's almost always innocent. Picture this. Maria sells handmade candles on the side. She has one checking account. Her paycheck goes in, her rent comes out, and so does every candle sale. Sometimes through PayPal, sometimes through Venmo, sometimes cash deposited directly. For years, this was fine. Nobody looked twice. But now that reporting thresholds and backup withholding rules have shifted, payment platforms are under more pressure to correctly label transactions as personal or business. When Maria's candle money and her personal money are tangled together in the same account with the same login, the same card, it becomes very hard for anyone, her, the platform, or her bank, to tell what's what. Here's where it gets messy. If a payment platform can't confirm whether Maria is a hobbyist or an actual business, and her transaction volume creeps up, they may ask her to verify her tax information. If she doesn't respond in time or the information doesn't match, backup withholding can kick in, meaning a percentage of her future payments gets automatically withheld and sent to the IRS instead of to her. And separately, her bank's fraud system might flag the account for unusual activity, because personal accounts suddenly showing repeated business pattern deposits is exactly the kind of thing fraud algorithms are trained to notice. None of this means Maria did anything wrong. It just means her account looks confusing from the outside, and confusing looks risky to both her bank and to payment platforms. The fix is simple, and I want you to actually do this if it applies to you. Open a separate account for any side income, even if it's small. Most banks let you open a second checking account for free. Route all your side hustle payments there, keep your personal spending in the other one. This one habit alone prevents a huge chunk of the account freeze horror stories you see online. Mistake number 2. Ignoring a verify your information request. Second mistake, and this one is sneaky because it looks like spam. With backup withholding rules tied to the new thresholds, payment platforms are sending out more requests than ever asking users to confirm their tax information, usually your legal name and your social security number or tax ID matched against IRS records. These requests often show up as an email or an in-app notification, and because we've all been trained to be suspicious of confirm your information messages, for good reason, scams are everywhere, a lot of people just ignore them, assuming it's phishing. Here's the problem. Sometimes it's real. If your name on file doesn't exactly match IRS records, maybe you got married and changed your last name, maybe there's a typo, maybe you used a nickname when you signed up, the platform is required to ask you to fix it. If you ignore that request past the deadline, the platform doesn't get to guess. They're required to start backup withholding, which right now sits at a significant flat percentage of your payments, automatically deducted and sent to the IRS. I've seen people find out their income dropped by nearly a third for months, and they had no idea why, until they finally opened that spam email they'd been ignoring since spring. So here's what to actually do. Don't click links inside suspicious-looking emails. Instead, go directly to the app or website yourself, log in the normal way, and check your account settings or tax information section directly. If there's a real mismatch, you'll usually see it flagged right there inside your account, no link clicking required. Fix it there. It takes 5 minutes and it can save you months of missing income. Mistake number 3, large or unusual transfers without a paper trail. Quick pause here. If this is helping so far, drop a comment telling me which of these 5 you think applies to you. I want to know before we keep going, because mistake number 3 is the one that scares people the most, and for good reason. Banks today run automatic systems that flag transactions that look unusual for your normal pattern. This isn't new, and it isn't really about the IRS directly. It's about fraud prevention and anti-money laundering rules banks have followed for years. But in 2026, with more digital money movement than ever, these systems have gotten more sensitive, and banks have gained more legal room to hold funds while they investigate. Here's a real pattern I keep seeing. Someone sells a car for $8,000 in cash and deposits it all at once. Or someone receives a large inheritance transfer from overseas. Or a parent sends their adult child a big chunk of money for a house down payment, all in one transfer. To the person doing it, it's completely normal and explainable. To an automated fraud system that's never seen that pattern from that account before, it looks exactly like a red flag it was built to catch. When that happens, the bank can place a hold on the funds, sometimes for several business days, while they ask you to explain the source of the money. If you can't produce a bill of sale, a written explanation, or supporting documents quickly, that hold can stretch out much longer. There's also a specific version of this you should know about. Banks now have more legal ability to hold transfers to protect older account holders from elder fraud, sometimes for up to 2 weeks. This is meant to protect grandparents from scams, a real and serious problem, but it also means legitimate large transfers to or from an older relative can get held longer than people expect. The fix here isn't complicated, it's just something people forget to do. Anytime you're about to move an unusually large amount of money, selling something big, receiving an inheritance, gifting a down payment, keep the paperwork ready before you make the transfer, not after. A bill of sale, a letter explaining a gift, an inheritance document, anything that proves where the money came from. If your bank flags it, you hand over the proof immediately instead of scrambling to find it while your money sits frozen. Mistake number 4, letting an IRS notice sit unopened. Mistake number 4 might be the most avoidable one on this entire list, and yet it's incredibly common. The IRS sends millions of notices every year, and honestly, most of them are boring. A math correction, a request for more information, a note that your refund is delayed. Because so many of these letters look intimidating with official IRS letterhead, a lot of people do the exact opposite of what they should. They set it aside, tell themselves they'll deal with it later, and then forget. Here's why that's dangerous in 2026 specifically. With the new reporting threshold shifting who gets which forms, more people than in past years are receiving IRS notices about mismatched income. For example, if a payment platform reported income to the IRS that you didn't include on your tax return, even by accident, these notices usually come with a response deadline. Miss it, and the IRS can move forward with their own adjusted assessment, which can include penalties and interest. And in more serious, prolonged cases, unresolved tax debt is one of the situations that can eventually lead to a levy, which is the official term for the IRS taking funds directly from a bank account. I want to be really clear about something here because this is where the scariest online rumors come from. A bank freeze because of unpaid taxes is not some sudden, silent thing the IRS does with no warning. There's a legal process. You get multiple notices first. You get a chance to respond, set up a payment plan, or dispute the amount. The freeze your account nightmare stories almost always start with months, sometimes years, of unopened mail and ignored notices, not a random surprise attack. So here's the fix, and it's genuinely this simple. Open every piece of mail from the IRS the day it arrives. Read it fully, even if it looks scary. Most of the time, it's a small, fixable issue. If it's something you don't understand, that's the moment to call the IRS directly or talk to a tax professional, not 6 months later after 3 more letters have piled up unopened in a drawer. Mistake number 5, the one almost everyone is making. Okay, this is the big one. The mistake I promised you at the very beginning, the one that's quietly affecting more people than any other on this list, and most of them have no idea it's happening. It's this. Assuming that because a payment platform didn't send you a tax form, the income isn't taxable. Let me explain why this is happening so much right now. Remember what we talked about earlier. The threshold for certain 1099 forms went up in 2026, and the $600 payment app rule got rolled back entirely. That means way fewer forms are landing in people's inboxes this year compared to a couple years ago. And here's the trap. The human brain naturally connects, "I didn't get a form for this," with, "I must not owe anything on this." That connection is false, and it's not a small technicality. Reporting thresholds only control when a company is required to tell the IRS about your income. They have never controlled whether that income is taxable to you. If you make $3,000 freelancing and nobody sends you a form because it fell under the new $2,000 threshold's paperwork trigger for that specific payer, you still, by law, have to report that income on your own tax return. Here's the story that really drives this home for me. A guy I'll call Dan does freelance design work on the side. In 2026, 3 different clients each paid him under $2,000, so none of them were required to send him a 1099 form under the new rules. Dan saw no forms arrive, assumed no forms meant no taxable income, and simply left that money off his return. The problem is, some of those clients still reported the payments through other channels, accounting software, business expense records, other required filings. Now there's a gap between what the IRS sees reported by others and what Dan reported on his own return. That gap doesn't disappear just because no form was mailed. Eventually it surfaces as a mismatch, which turns into a notice, which turns into exactly the kind of ignored mail spiral we just talked about in mistake number 4. This is the mistake hiding underneath almost every other one on this list. It's not dramatic, it's not a scary headline, it's just a quiet misunderstanding that compounds over time. The fix: track every dollar of side income yourself, all year, regardless of whether you expect a form for it. Keep a simple spreadsheet or use a notes app. Client name, amount, date. At tax time, report all of it, whether or not paperwork showed up. Think of any form you do receive as a helpful reminder, never as the full picture. If you're watching this and your gut just dropped because you think you're already in one of these situations, take a breath. This is very fixable in almost every case, and panicking makes it slower, not faster. Step 1. Figure out who actually froze the money. Was it your bank, flagging unusual activity, or was it the IRS, through backup withholding or a levy? These require completely different phone calls, so don't waste time calling the wrong place first. If it's your bank, the hold usually shows up clearly in your account with a note or code. Call your bank's fraud or compliance department directly, not just general customer service. Step 2. Gather your documents before you call anyone. Bank statements, invoices, any messages from clients, proof of where large deposits came from. Having this ready before you're on the phone cuts resolution time down dramatically. Step 3. If it's an IRS matter specifically, a notice about mismatched income, or backup withholding on a payment platform, call the IRS directly using the number printed on your actual notice, not a number you found through a random search. Ask specifically what caused the discrepancy and what documents they need from you to fix it. Step 4, and this one matters. If the situation involves real money and real complexity, don't try to be a hero. Talk to a licensed tax professional or CPA. This isn't me deflecting your question. It's genuinely the fastest and safest way through anything beyond a simple mismatch, and a good professional can often resolve in one phone call what would take you weeks to untangle alone. Let's run through it one more time, quick and clean, so it actually sticks. Mistake 1. Mixing personal and business money in the same account, which confuses both your bank and payment platforms. Mistake 2. Ignoring verify your information requests, which can trigger automatic backup withholding. Mistake 3. Making large, unusual transfers without keeping proof of where the money came from. Mistake 4. Letting IRS notices sit unopened instead of dealing with them the day they arrive. And mistake 5, the quiet one underneath all the others, assuming that no tax form means no taxable income. 5 mistakes, all of them avoidable. None of them require you to be a tax expert, just a little bit organized and a little bit less afraid to open your mail. If this saved you from a headache you didn't even know was coming, that's exactly why I make these. Subscribe, hit that notification bell, because tax and banking rules are shifting fast this year, and I break down every real update the moment it happens. No rumors, no fear-mongering, just facts you can actually use. Drop a comment and tell me which of these 5 hit closest to home for you. I read every single one, and honestly, your comments help me figure out what to cover next. If you know someone with a side hustle, a small business, or an elderly parent handling large transfers, send them this video. This is the kind of thing that's so much cheaper to prevent than to fix. Thanks for watching all the way through. I'll see you in the next one.